Hi, I'm Khleif. Each and every week, I record an interview with a thought leader that I know you're going to get a ton of value from. Now, here on YouTube are the video versions of my podcast, Lifetime Cash Flow Through Real Estate Investing. Now, to make sure you get the latest information, please subscribe and hit the notification bell. Let's get started. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Khleif, and I'm thrilled you're here. I know you're going to get value from the gentleman we're interviewing today. His name's Chad Hudson, and he has been buying and selling real estate since 2000. Started out in single family like the rest of us, and has just, his own, 30 plus properties and done over 100 transactions, done the whole flipping game, and has now converted over to syndications and started actively investing in syndications. So we're going to dig into all that and go deep. Chad, welcome to the show, my friend.
Hey, Rod, I appreciate it. Thanks for having me.
Yeah, absolutely. So why don't you tell my listeners a little bit about how you got rolling, where you came from, and how you got to where you are today, and then we'll drill down on some of the stuff that you bring up.
Sure, absolutely. I grew up in a small East Texas town, about 60 miles from Dallas, Texas, and fortunately, I could hit a baseball from the left side and got offered a scholarship to play baseball at Texas A&M University. Being from a town with 2,500 people, getting to a daunting university like Texas A&M would scare most fellas. But I tell you what, I knew when I walked on campus I had an opportunity, and an opportunity most kids generally don't get. So I wanted to take full advantage of my time there, and the network there that Texas A&M provides is invaluable. So, my time there, I'm so appreciative of it. What I did was I knew, I was going to be an entrepreneur after baseball, but I had to make a decision fairly quickly afterwards. It was either pro ball or the next chapter, and luckily I had met my wife, which my girlfriend at the time, she was basically got accepted to law school. And I saw my first pro ball paycheck and I said, gosh, I've got to do something. So I was born an entrepreneur. My dad was an entrepreneur. And what I did, I made the decision and walked away from baseball. And we did a startup in 2000. It was a buy here, pay here car dealership. And we basically started lending our own money, Rod. And I tell people all the time, you got to have a vehicle type to actually, you hear people wanting to just jump in. You got to have some money. You got to go and earn some money. So what I did was I was fairly conservative. I built that company, but any extra income I had, I invested in real estate. And, we back up a little bit to that company. We bought vehicles, but I was the lien holder and owner financed them and lent the money to the demographic that couldn't get financing. So I learned so much in that industry that it actually taught me how to talk to people. It taught me how to taught me the lending side of it, and it taught me how to invest. And fast forward, I actually, needed a place to stay beforehand before I got married. So, funny story, kind of a light bulb moment for me was when I moved. As soon as I got done playing, I needed a place to live, and I bought. I was already making money, had a place, and bought a place there locally, in Rockwall, Texas, which is east of Dallas, on Lake Ray Hubbard. And one of my best friends, he needed a place to stay. He was in Dallas and he was renting a place, I believe, for $1,000 a month. And my note was $716 all in. And I charged him $700 for a room. And before my wife and I got married, of course, he wasn't going to live there much longer after we got married, but it was a learning experience for me that I just said, good gosh, this is a forced savings account. Someone is going to pay my rent, my mortgage, and I need more. And that's where the journey began. So, when you're young and your ego is so big, you feel like, hey, I want 100 of them, and I want 100 of them now, and I'm going to continue to run my business. And that's kind of how I was working, and my hair on fire. But different chapters and different equations come into play, such as marriage and raising a family. But it was very fortunate on my behalf to have this company that I was running support my real estate habit, I like to say, and I was able to do everything that you can generally do in real estate, such as the development, such as fix and flips, and scale up on the buy and holds to to build spec homes, custom homes. And I knew my passion was in real estate, so I sold that buy here, pay here dealership. I sold the real estate, I sold the accounts, I sold the notes and the paper. And moving forward, my wife and I, which I have to mention, she's been a great deal of help. She's a real estate, she's a contract attorney, some real estate transactions, but she's in-house counsel for a company. We just decided that, we're going to make this real estate development company that we have our full-time gig, or my full-time gig. And so we sold the company, the original company that I started. And here we are now. I feel like, I told you earlier, I feel like, not sounding arrogant, but I'm seasoned by 40. And I feel like I've got the answers to the test.
So you're like the space shuttle on the launch pad with the steam coming out of the bottom.
Yes, sir. Absolutely. If you're going to take risk, I'm pretty sure you'll agree with this. If you're going to take some risk, by gosh, do it when you're 20 or
oh yeah. It's much scarier when you're long of tooth like me. Of course, I've got socks that have a decade on you, but it's still, I hear you. Now I want to circle back to a couple things you said.
Yes, sir. Okay?
Because I'd like to actually clarify them. You said you got to have money to do this business. And I'm going to tell you that you don't need a lot of money to do this business. As you're going to discover, we're going to talk about syndication here in a minute. But if you're the one bringing the money to a deal, which is, I think, the direction you want to go, it really, it's a team sport, and you can find the money to do your deals. You can find the money for your at-risk capital. You can find the money for the equity. You can find the money for pretty much every piece of this. Now, I tell my students, my coaching students, to use their money for operational purposes. Even the millionaires that are in my coaching program that have, tens of millions of dollars. I tell them, don't use your own money. There's so much money out there looking for deals right now. Use your money for the earnest money, for the due diligence cost to do the building inspection, for the finance cost to put the financing in place, all of which you get back from the deal. But so I just wanted to, really say that your way of doing it, where you raised the money, you made the money, you sold everything because you don't want to manage anymore. I remember you telling me that before we recorded. To get into this business is a common way that it's done, but I've got students that have done it with very little of their own money. So I just want to flag that.
Yes, sir. Absolutely. And I'll clarify. At 23, when I said money, it wasn't much, but what you said, startup money or living expenses. So you can't roll into a project with a rainy day without a rainy day.
Yeah, agreed. Unless you've got a partner that's got it. Yeah. Like in my case, when I was in my 20s, I bought tens of millions of dollars worth of property and none of my own money. 50-50 in JV partnerships. I just talked a good game, was able to influence people because I was so passionate about it. But I want to circle back to something else you said, which is really powerful. And those of you guys listening, sales is such a critical component of this business. And the fact that you had a car dealership, doesn't get any better than that for sales training. That's the ultimate in sales training. You've got a few minutes to build rapport and then convince someone to buy an asset. And so, those of you listening, be sure that you spend some time learning how to sell. You may think that that's not important, but it absolutely is important. In fact, back to my students for a minute, I give them lots of gifts, and one of them is a sales book because it's, they're like, well, why am I getting a sales book? Because you got to sell yourself, Chad, you're going to be out there raising money, for other people's deals. That's all about building relationships. But I love your story about renting a room to pay your mortgage, brother. And I hope you guys are listening. That's just so awesome. Or buy a Plex and rent half of it. What an awesome way to get rolling. So talk about what you've done since you sold out. I don't want to steal your thunder. Talk about what you're doing syndication wise, or what you've done so far.
Sure. After selling the company and moving forward, I have a development company that I still build how that's my passion as far as building. And I've built some smaller multifamilies, but
yeah, you said you built some fiveplexes, I think. Is that what I said?
Yes, sir. I've sold
awesome.
I've sold my smaller units, and I kept one fiveplex that I still have to this date. But and it was another learning experience, and especially listening to guys like you and your show, and the fantastic learning experience that you can come and get from that. I was to the point where I wanted to scale up. I knew that I couldn't scale up alone, so I reached out to several different syndicators and started learning the industry. And I knew that I wanted to be a part of that. So I've invested in my wife and I said we had sold just about all of our portfolio and wanted to go that direction. So, I love that,
So you invested passively in some operators, you checked them out and you invested in their deals. So guys, I want to kind of drill into that a little bit with you since you brought it up here, Chad. I think it's a fantastic way to get into this business is to start passively. I mean, like right now, are you still in the Dallas metro? Are you still in that general area?
Yes, sir. I'm a suburb of the Metroplex.
Right. And we've got an asset right now under contract. We're raising money for, and if you're accredited, for God's sakes, reach out to us. But the point here is what's great about that as a way to start is not only do you learn a little bit about what's going on with the business, but in my case specifically, I mean, I make it a real effort to teach my investors what we're doing. So we do webinars, I record them, and we talk about these, the different stages of this from putting it under contract to arranging the financing to the reposition, the work we do, the CapEx we do on the property to, ultimately we'll be talking about the exit strategy and the disposition. But, what's great about starting passively is not only do you get to learn, like I just described, but it goes on your resume. Okay. So, when you talk to potential brokers and potential investors, you can tell them you're in a few hundred deals or a few thousand deals, whatever the case may be. Yeah. Cause you are. I mean, I'm sorry, not deals, a few thousand doors. I'm sorry. You can tell them you're in a few hundred doors or a few thousand doors. And certainly you've got instant credibility, number one, but because it's on your resume. And also when Fannie and Freddie agency debt looks at you, they look at that as experience. You're going to get a better interest rate. And so it's just a great way to get started. So, and it's not uncommon, this path that you've taken from single family to now you've actually done some development and bought some plexes to now passively investing. And I know that the next step for you is active, either raising, I think you're going to raise money for other operators. Is that the business model you're thinking?
You're correct. I mean, I felt like I needed, in order to, what we talked about earlier, have skins on the wall. I feel like my resume is great as far as from the experience side, but
right.
I'm a player on that deal. I went and I didn't talk to you about that earlier, but I went and drove by that product. It's in my backyard there, and
the one that we have right now.
Yes, sir,
oh,
Lake
no kidding!
Highlands.
Awesome.
So,
awesome.
Again, when I drive up to something like that from an investor side, I know what to look for. I know what type of demographic area to ask questions about. I know all the questions to ask. So, yeah, no doubt. I mean, from being a student and from having skins on the wall, I've prepared myself for this particular moment, and and not that I was afraid, and not that I'm afraid to go in alone. My ego's not big enough. This is a team sport, and that dates back to for me playing for baseball. It is truly a team sport, and I felt like I was a one-man band with the 30 units, and I knew if I wanted 3,000 units that I need to hitch my wagon to some good teammates, and that's kind of where I'm at.
I love it. Honestly, life is a team sport, my friend. It's not just, but definitely multifamily real estate is. And like I said, your progression is very, very common. Sometimes people stay in the passive side long term or forever, but many of them have aspirations to go active. And that's why, I decided as part of my program, I want to incorporate the educational component because I freaking love it. That's the bottom line. But guys, if you're interested in talking to us and looking over our shoulder, just text partner to 41411 and we'll get you on Robert or my calendar to chat. But you got to be accredited in ours. Now, certainly there are ways to do syndications where you don't have to deal with accredited. But in that case, you have to have existing relationships. That's what's so great about the new laws is you can advertise. Like I can mention this on the show. In the past, you could never do that as long as I'm going to accredited investors. But there's also a new syndication out there called Reg A Plus, where it takes a little longer to get it done, but you have to have the books audited. But when you do that, you can actually advertise and take sophisticated investors, which is kind of cool. It's something we're looking into on one of our deals. But so let's back up and I want you to give some advice to people like where you were before you got started. And there's a lot of those people listening to this show, Chad, and I know you can add value to them for sure. So first of all, when you were starting out, did you have any aha moments? I mean, anything come to mind? You talked about one of them where you rented out that room and it was like, holy shit, I got my mortgage paid for. Anything else come to mind when I asked that question?
Yeah, real quick. I'm still friends with that. He's a great friend of mine. And my wife and I just sold that unit we bought for 80 grand. We sold it for 260. And he was like, you son of a, I said, hey, you paid the mortgage for the first 6 years, buddy. So,
wow.
I get asked this question and as far as real estate advice, it's simple. You find a mentor. And it's that simple. And, that's what I was talking about earlier about being at a large institution like A&M. It taught me how to interact and taught me how to ask questions. A lot of kids, you cannot be afraid. And I tell people all the time, find a mentor. Do not be cheap. Go buy them dinner, lunch, buy them coffee, and then invest in a deal. Maybe bring a deal to them. The old adage of 50% of something's better than 50% of nothing.
Yes, sir.
I tell them, Rod, this, the generation above me, my father or that particular generation, they're badasses in my opinion. They're tough. They blaze the past for us and they will bleed to tell you information. They will tell you their story. They will tell you their success story, and they'll tell you what not to do. And to me, I don't give a shit about a college education or boots on the ground or sweat equity. That is invaluable when you can hitch your wagon to somebody that has been there and give you life lessons and tell you what not to do. And so I made it a point when I was 20 years old to hang around older friends. And I still have every one of those today. They have all been a very important piece of my success. And I mean, quite frankly, my success is because of them. I mean, I've learned from them.
That's beautiful, man. That's beautiful.
You hear them tell you, you don't want to spend your 40s paying for your 20s and 30s. And that was my goal was, you know what? I'm tired of hearing that. So I'm going to make it a point to not do that. So I want to set myself up for success in my 40s and not pay for mistakes. So
nice.
Not to say that I was perfect by any means. I made a lot of them, but I feel like I minimized those from having mentors.
Yeah, no, I appreciate you mentioning that. And I've had scores of mentors over the years and have mentors now. And now I went ahead and created my mastermind, and gosh, we're up to $4 billion in assets in that thing. We're meeting in San Diego in March, and there's $4 billion in the group in assets represented. And, and we meet for one purpose, and that's just to help each other. But guys, those of you that are out there, what Chad said is brilliant. And most people, even, you mentioned that generation, certainly that generation wants to help, but people in general are happy to help. If you come at them from a place of wanting to learn, and especially if you can figure out a way to add value to them, you pay for lunch, you pay for dinner, whatever, most people are happy to help and talk to you and tell you about their mistakes and their journey. And And if you take a genuine interest in them, like, Dale Carnegie's book, How to Win Friends and Influence People, and you allow them to talk and you ask questions, my God, they'll think it's the greatest conversation they ever had because they're the ones doing all the talking. So let me ask you this: any seminars? I'm sure you know what that term means if you've listened to. You said you listened to my podcast. Any seminars that you want to mention in this journey of yours so far?
Yes, sir. I'm going next weekend, Rod, which I believe is that'd be the 28th, to the Multifamily Convention in Houston, Texas.
Oh, that's the one. I'm actually speaking at that one.
Speaker,
okay,
yes, sir.
I'm opening the ceremonies. Yeah, guys. In fact, let me mention that. I'll make sure we put a link. I'll make sure we put a link in the show notes, but I'll also have it on my personal Facebook page and in the big multifamily group. But that's in Houston. It's a one-day event. Nothing's being sold. It's my friends Ferris Musa and Kenny Wolf putting it on, and so you're going to be there. Awesome. We'll get to meet.
Yeah, both great guys, as yourself. And I've talked to Ferris and Kenny, had lunch with Kenny, and again, fantastic guys. One thing I've learned in this industry is, there is some very, very, very bright people. And I love that. That was another goal of mine was to never be the smartest person in the room. And you always continue to build create and build your game there. But both Ferris and Kenny are going to be there, and I know you're speaking there, so I'm super pumped.
That's
show that I sucked at networking, but that my 2019 New Year's resolution was to get out there and go meet people.
Love it. Yeah, and both Kenny and Ferris are in my mastermind, by the way, and actually I spoke to Kenny this morning. We're doing a deal together right now, but great guys. And that should be a lot of fun. And I'm bringing the boss with me. So we'll hang out in Houston a little bit before and after, but so we're looking forward to that little trip, so you didn't answer my question though. I asked you if you had any setbacks or seminars, as I like to call them. Has anything come to mind where you got your butt kicked that you'd be willing to, if there was a lesson involved that you'd be willing to share?
Absolutely.
Okay.
Yeah, I bought a boat. Does that count?
Well, I was hoping it would be real estate related.
I'm kidding.
Hey, that's funny.
I do not have a boat.
The boat owner's life. The day you buy it, the day you sell it.
Don't recommend buying a boat.
Right.
But yes, sir. I've got a great story that it's real estate related, but it's more, paying attention to the signs around us, and it's more as far as my real estate development company that I was doing. I was building some spec houses but it's a good story that I learned from. I carved my way out of it, and still to this day, my line of credit is still there. But I had bought 6 lots, built 6 specs, and saved the best lot for last. And it was one of those things where I wanted to build the nicest house on the street. It was the best lot, and I got caught. I got caught in 2008, 2009, just like everyone else. But the rainy day fund was there. I went ahead and bought the house. I couldn't sell it. I kept it for 5 years and leased it out. And I went against the grain on a lot of my rules of thumb. But so here I am, a landlord about 70 miles from my house, and I really didn't want it. It wasn't meant to be a rental. But what happened was I lost about 25 grand, and I went into the local bank that I dealt with, and I was a young kid at the time, and they gave me a $50,000 LOC, line of credit.
Wow.
And back to the mentor thing, and I developed a relationship with a partner, and that was the bank, and they gave me a 50 grand LOC, and I still 18 years later have this relationship with that same bank, and that line of credit, Rod, is $1 million.
Yeah. I love that. It's a great story. It's a great story.
All that is from doing the right thing, paying it back, and doing what I said I was going to do. And so they've extended that, and they're a partner if or when I do other deals, and they have my back. But I lost money in that deal, but I learned so dang much. And as far as the buy and hold deals, you can get beat up on them, but it's kind of hard to if you buy it right, which is one thing, but you can sit on it and let the appreciation sit in and bail out at a later moment. But that was my biggest setback, and I learned a great amount from it. And my biggest, probably my biggest take out of that is really, really see the signs. It'd been easier to sit on that lot and wait for the market to come back, but I got overexcited. So
yeah, well, we won't compare memos on 2008, but so knowing what you know now, I know you're 40 or about 40. What would you tell your 20-year-old self about this business? What might you do differently?
Did I mention don't buy a boat?
Yeah, I just sold mine. Thank God. I actually got my money back out of it. I couldn't believe it. I didn't lose a dime, which is very unusual.
Yeah. I mentioned mentor, which is key, and really surround yourself around the right people. I try to tell youngsters, if they ask me questions, I will tell them to go put a deal together, take action, and be smart about it. Though that, I mentioned earlier, take your risk, take your moments when you're in your 20s, and when you got time, when you don't have much responsibility, when you don't, maybe you hadn't started a family yet, maybe you're not married, maybe you can take more risk. But it's one of those things where ask questions and build a rapport. It's the mentor way. Go find a mentor.
Love it. Love it. Love it. Listen, brother, thanks so much for being on the show. I really appreciate it. I'm really looking forward to shaking your hand this next weekend. And, that'll be fun. And I'm going to do my best to bring my A game and add value there. And it should be a lot of fun to see Kenny and Ferris and all the other people that are showing up. I've got some of my students showing up there as well. So that'll be a blast. Anyway, thanks for being on the show, buddy. And you definitely added value. And I look forward to getting to know you better. And I'm sure that we'll stay in touch even after next weekend.
No doubt. I'll see you next weekend. And hey, listen, I really, really appreciate what you do and having me on. Your show is fantastic. I've listened to every one of them, and I'll get on that treadmill and kill it and listen to you. And man, I love it. And I appreciate what you do. I really mean that. Truly.
Thank you. Thank you, brother. That's very kind of you to say that. All right, my friend, take care.
All right. Take care, buddy. Thank you.
See you. Hey, thanks for watching. Please subscribe to my channel. And if you listen to podcasts, join me on iTunes, Stitcher, or wherever you listen to those podcasts. Just search for Lifetime Cash Flow through Real Estate Investing.